Now, over to Japan, where government handouts have been encouraging Japanese citizens to start spending once again, at least for now. The jobs data, though, quite a lot less encouraging. Mike Fern's been going through the latest economic releases. Mike, what are we seeing? We've been waiting for the recovery in Japan. If it happens in Japan, it can happen anywhere. But are we getting it?
Well, we may be seeing green shoots, but they may turn out to be astroturf manufactured by the government. Paul, household spending did rise by 0.3%, and that was the first increase in 15 months. Bear in mind, though, the government gave cash handouts of at least $125 to every Japanese resident. It's also offering tax breaks for fuel-efficient cars and incentives to buy eco-friendly appliances. Shoppers may put their wallets away after spending the government cash, though. The job situation is getting worse. Companies are cutting workers to lower their costs. The unemployment rate rising to a 5-year high in May. There were only 44 jobs on offer for every 100 applicants. That's the worst on record. Fund manager Tang Tengbu says even when Japan recovers from recession, he's not going to be investing here.
Japan doesn't really matter anymore. I think when you look at the economic conditions globally, you cannot just look at the absolute size of any economy. Japan is still the second largest economy in the world, but the rate of change of its economy has been extremely slow.
Well, even in the middle of the worst post-war recession, stock benchmarks are rising. The Nikkei's had its best first half since 1999. The broader topics, the best first half since 2004. Paul, back to you.
OK, Mike, thank you very much for that. Let's look at what's going on in Japan. Mike's going to stay with us, but let me turn now to James McCormack, head of Asia-Pac Sovereign Ratings at Fitch Ratings. James, very good day. We're going to take a look at Japan specifically in just a moment, but the story there is what we're seeing around the world. There are some signs of recovery. Jobless rate still rising. This is typical for a recession, though. It does tend to lag.
Yep.
I mean, government spent a lot of money, and this is what you're concerned about, fiscal balances. Are you confident that things are turning out the way we want them to turn out?
Well, I think in the short term we can be confident that these policy measures are going to have effects, and I think that's exactly what we're seeing in Japan. We're not really seeing a sustainable recovery that's going to lift the Japanese economy through the medium term. We are seeing a bounce from the fiscal stimulus programs, and we're going to see a little bounce from lower interest rates, which are virtually at zero. But that labor market is really concerning in Japan. It's as bad as it's ever been. So I think that is really going to curtail personal spending as the year goes on, and we're expecting further weakness. So it's not going to be a very good year, despite what we've seen just today.
OK, Mike?
James, how concerned are you that even after the government gets Japan out of recession, that Taro Aso and the LDP cabinet are unravelling the Koizumi reforms, that they're pushing up government debt and going back to an economy that's just driven by debt spending?
That really is a major concern for the medium term. I think it's not so much a concern for this current government because there's going to be elections quite soon, but it doesn't look to us like whatever the next government is, there's going to be that much difference in terms of fiscal policy. It looks like the debt-to-GDP numbers of the government are going to probably approach 200%. That's way out there. That's on a completely different scale from any other country that we look at. So I think that, households are increasingly becoming concerned about the state of public finances as well. So even if the government does increase spending or have more of these cash handouts, I think people are going to be increasingly reluctant to spend that based on the fact that they know taxes are going to have to go up later. So public finances are a concern, and I think they're going to be increasingly a concern for Japanese households as well.
Well, I mean, assuming, James, that things don't change, we don't get the sort of Koizumi-like political upheaval and reforms coming in, taxes going up like they need to, how's this going to pan out in Japan? I mean, what's the worst-case scenario? Well,
I think the worst-case scenario is the debt-to-GDP number just continues to escalate. So I think, as I said, this year we could be approaching 200%. We could be talking 220, 230% of GDP by next year. Again, that is way, way higher than any other country. So it's, the government at this point in time doesn't have a strategy to address that issue. The way forward is to increase consumption taxes. Nobody's going to talk about that in the lead-up to elections. Mm-hmm. So we're not really expecting to see much in terms of fiscal reforms until after this election later in the year. How it all plays out in the medium term is anybody's guess, but I think the state of public finances is a real concern in Japan.
Just want to bring Mike in for one final one. Mike?
Real quick, James, what does this mean for Japan's credit rating? Given those concerns, would you be considering any downgrades?
I think we need to look at that quite carefully. I think what we'll probably do is wait until the next government's in place, take a look and see what their policy measures are. They do have an opportunity to address this issue with higher taxes going forward, and we're going to have to wait until after the election for anybody to bring that policy out. So, you know, it's a wait and see for now, and the next government's got its plate full and some issues to address, but it could be rating relevant for sure.
Okay, we're going to watch that. Stay with us, James. Plenty more to talk about in the region. Mike, thank you very much indeed for that. Mike Fern reporting there from Tokyo.